Hello everyone. So I know I haven't been uploading recently, but that's because I've been preoccupied with uni and a lot of other things in my life that required immediate attention, and so I haven't really been on the charts since then. But I have been finding some more time and I'm managing my time better. So I'm looking to get, well, I'm not looking to get back in the charts. I am already back in the charts, and as you can see now. So as a result of my busier life, so to speak, I kind of took a different approach to trading for a while over the past few months. And I believe that this also ties into what I'm about to explain in this video. And I shifted to a more of a investment approach, so to speak, using the forex market as an investment zone. But that's really night and day from how I usually trade, which is day trading and at the most swap trading. Well, not really swap, I'd say intraday. And that's really the extent of my trading, or that was the extent of my trading. But the last few weeks, I did experiment with some investing, and this ties in to what I'm about to talk about in this video. So, for those of you that have been trading, there's been some pretty big news, and that was the gold rally and subsequent crash of gold and also silver. But I won't be talking about silver in this video. I'll just be talking about gold because that's what I had a position, or should I say positions, on. So yeah, the gold the gold crash was, well, not, let's not say crash. Let's say the gold rally. So it rallied to a really, really high. I believe it was the highest point it had been in history actually. So if you look at this chart here, this was what I'm talking about because this is what I'm trading on, what I was trading on. I figured that because I wasn't actually as free as I was prior to that trade, I wanted to open some positions and just leave it on. And I heard about the gold rally and I thought this is a good opportunity to make some money, but next time I'm not going to do that anymore. And that's something that was really a bit of wrong judgment from me. But never mind, we move. So, as I was saying, this this I believe is the highest point it has been in history. And if you look at that, the graph shows that highest point it has rallied to in history. And yeah, I decided to get in on it. So when I decided to get in on it, it was probably halfway through the rally. So this is my open position here. And so I actually had two positions. So I'm gonna explain this real quick. And and yeah, so what I did was I heard about the gold rally and I said, yeah, I'm gonna get in on it. And I opened a position which was only a small position. I'm not gonna say how, I'm not gonna say the numbers, but I opened the position and gold continued to rally here for 3 days, 4 days. And on the fourth day it crashed, but it rallied for 4 days. And I was plus 450, plus 450 USD. Now, this is where I got really greedy, yeah. So instead of cutting my losses and getting out I had this notion in my mind from day trading that you set and forget, that you if you don't see a reason to get out, you get out. But sorry, what I meant was if you don't see a reason to get out, you don't get out. And but that's not the correct way of thinking about the market all the time, because evidently if I got out there, I would have cut my losses, yeah. And that was a really suspicious place for it to be, because signifying that that's the highest it's been in history implies that there's going to be a reversal soon. And I should have taken my 450 and gotten out. That's what I should have did. Yeah, but instead, I believed that this was an actual boom in the market. This was not an overpriced, overvalued kind of thing where people. I didn't think it was a bubble, but I'll get to that later. But it actually was a bubble, and the bubble popped. The bubble, there was news, which I'll get to later, that triggered it, and it popped. And so gold fell like crazy. This was in the matter of 2 days, as you can see. And what I did up here was, instead of getting out, I didn't think it was a bubble, so I entered another position. That's what I did. I doubled down on my stuff. Yeah. And gold dropped. It dropped to below below my entry. It dropped to below my entry, way below my entry, and I still had some sense of reasoning in me. So I said, I'm a hold. I'm a hold gold. Sorry, I'm a hold gold, and I held it until I was around minus 100 net. When factoring in the two positions, I was minus 100 net, and then I got out. So that was a bit of a learning lesson for me. That I learned a lot from that. When you don't win, you learn. You don't lose, right? So I want to discuss about my reasons for entering and what I believe the market was doing. Don't take my word, because I'm just a retail trader, right? I'm just a re- I'm just a retail trader, and I'm not that good yet. So don't take my word. But what I believed was happening was gold was rallying, right? Well, I didn't believe that was happening. That was happening. Gold was rallying. And what I believed was influencing the the gold rally, and I still believe that these are facts, that gold, it will continue to rise because of these movements, these market ideals, which is the first one being that countries are losing interest in the US dollars, and they're trying to move away from it. For example, Russia and China, they're we see Russia, um, they were trying to start their little BRICS alliance back then, and I don't know whether that worked out, but the important thing is that we can deduce that countries are moving away from the US dollar, because what the US does is, when countries like Russia and China, they used to keep their reserves in the US Fed in US dollars, and whenever the US had any type of disagreement with them whatsoever, they would freeze that reserve. And so, what countries are thinking now is that they're fed up and they want to move away from the US dollar. So, in the lack of a better currency to transition to, they usually gold is the best thing, because gold holds its value really, really, really well. better than any other monetary asset. So countries are naturally moving towards gold, right? We also had geopolitical tensions, including that of the US and Iran. Um, well, geopolitical tensions, we've had that ever since Trump has been in office. We've had that for for around a year and a half now. So geopolitical tensions is not a new thing, but it's always driving that uncertainty in the world of finance, and are people are doing what countries are doing, which is moving away from the US dollar, and they're trying to find more places that they are confident to put their money in. And one of those places, one of those classic places that they put their money in is gold. So that's also why gold is improving in value. And we've got when I entered my position, there was news of the US government potentially facing another shutdown, I believe, because the two parties they couldn't agree on a funding bill. So if they didn't pass that funding bill, then the federal government would have had to shut down. But and this ties into why it crashed actually. But yeah, that's the three main reasons of why I had confidence in gold and why I thought at the top of that it wasn't a bubble and it would actually just keep going. But yeah, I thought that, inflation in the US was also high, and I saw forecasts that the Fed was planning to cut interest rates even more, which would further push that inflation. But apparently, the day where it crashed, the US government they reached an actual agreement to pass a funding bill. So the government didn't shut down. And what happened was, I said that I didn't think it was a bubble, but it actually was a bubble because people were overvaluing it. There's no mistaking that gold is going up and up and up because people people are moving to gold. There's no doubt about it because they're losing faith in the dollar and everything else, and they're going to gold. There's threat of World War, uh, threat of a world war, threat of war. People naturally are going to go to gold. So gold will improve. It's going to go up. But at that very point in time, it was a bubble. Yeah, it was a bubble, and I failed to recognize that. And what a bubble does is, even if the tiniest little thing pokes it, it pops. Yeah, and there was a thing that poked it that day, which was the US government reaching an agreement, and that popped the bubble. So, a little good news for the US dollar, and gold just flops that day. The entire market goes boom. Yeah, so that's why I lost money. But yeah, this was really not a good trade for me. First of all, I shouldn't be investing in the forex market. I should be investing in actual gold, putting my money in actual gold on the stock market or actual physical gold or electronic gold. That's not gold spot. The forex market should, for me at least, be mainly for day trading because that's what I'm good at, that's what I'm comfortable with, and that's what has brought me the most success. So this has been a lesson to me basically to stick to my strategy of day trading. Cause yeah, and next time it's a lesson for me to cut my losses. Well, not cut my losses, take my profits when it's up. and to constantly monitor the the new situation in the market. Because if I had known the news, then I would have gone out in time. But yeah, that was the gold crash. Hopefully, you guys didn't experience the same bad luck that I did, and I hope you guys made some profit. But that's just me. This is just me documenting my own journey. As always, don't take my word for granted. Yeah, and I'm gonna be on the charts more. I have to be on the charts more. I'm going back to Euro USD. I'm not doing gold anymore. I've never done gold. I don't know what popped in my mind to go on gold. I just see people had success and gold was rallying, so I thought I'd join in, but not anymore. Yeah, next time, no more gold. Euro USD. That's the asset pair I'm comfortable with, and I will be sticking to that. And the one thing that's going to make me money in this market is my strategy. So I will be sticking with that. And thank you very much.